Welcome, it's the Crypto Sniper. Yeah, how are you all doing? Good to be back with you. We're going to talk about Bitcoin. We're going to talk about XRP. We're going to talk about Trump's portfolio. Yep, and we'll talk a little bit about RLUSD, a tiny bit of watchy. We're going to have a look at the news. In fact, I'm not always a newsy guy. I'm a charty guy. But I do think there's some news drops that want to be covered, and I tend to forget them and which ones, and not have enough browsers open to show you. So I want to cover the news first to make sure I get them all done. And there's a reason why. I don't find it useful when YouTubers just read the news to me and they just go over the article, unless they've got a real special take or they've got an insight on top of it and overlaid. So I'm never going to insult you by just sitting here and reading whatever trading view is thrown up in articles. But there's a couple of things that have been dropping consecutively in a row that lead me to a certain potential possible outcome that may have a higher probability than it's ever been before. And I'm going to dovetail it into a couple of concepts that I want to throw at you that are going to be talking about the halvening cycle and its diminishing relevance to me, and what these other things mean. Potentially. So let's get straight into it before we go all hardcore technical. Let's talk about the news and the happenings. So here we have, it's hit 101. Okay, great. Let's check a couple of these articles. So article number 1 that just came in, I wasn't even going to mention this one. I had 2 others that I'd lined up, and this one just came and added more juice. So I'll start with it first. Australia's biggest pension fund makes historic 17 million Bitcoin investment a national first. Okay. Now, this is kind of really interesting because I've just done an update with my community and said, you're going to start to see pension funds doing this. And this one popped up. And that was just from the articles before, because in actual fact, before we had a BlackRock article. I want to see the news now. It's taking it away. We had a BlackRock article that said, adding 1 or 2% Bitcoin to your portfolio will have a similar effect to having Magnificent 7, Tech, etc. So now you've got a couple of concepts. I'm blurring articles. I'm going to find that one in a second now. It was on earlier, funnily enough, and now I didn't bring it up, but we'll discuss it. So BlackRock is now saying portfolio management can incorporate crypto. In fact, we recommend putting in 1 to 2% of Bitcoin. Funny that after they've made big investments, they've pumped the Bitcoin surge with the Bitcoin ETF. Let's not forget that this whole push, this will be a quick chart reversion, this whole push from here where we were sitting at 25 to there was BlackRock ETF. Then the breakout from the broadening structure, let's make my news thing go away for a second. The breakout from the broadening structure that we had given you as a key triggering event that will happen, and it happened, and we told you before, we said, there you go, it's happened, and it's going to do a return move, it's going to wind up like gold, and then it's going to pump, and that's the best part of the move. Remember all that? Yep, we did say that. We don't always get things right though, but we did say that one on that occasion, and that then gave you your next pumpamental surge, which was essentially the Trump election win, which is, hey, I'm the crypto guy. I was the dollar guy, now I'm the crypto guy. I went to a Bitcoin conference, etc. Now, when people put it under Trump, remember, the figurehead that is controlled by nameless dark state legacy representatives of the super wealth of families, power control structures, etc., that have appointed handlers that are all advisors around Trump. Trump just gets to be the front man, kind of like Elon for the Rockefeller money of AI, Neuralink, chips in your brain, battery iPhone cars to track and trace you, surveil you, etc. So anyway, so the 2 big surges, BlackRock's ETF, that's the ETF here, that one, and then Trumpy, hey, it's all a crypto season. That's where you are. So back to the news. So what we're saying is, by politicizing and having Trump in here with this big, hey, we're going to lead crypto. So let's just do a quick little clip where good old reverse indicator Kramer is talking, and he's talking to Trump. Let's do that one, and I'm going to have to play this loud loud.
In crypto, very different from the previous administration. Strategic petroleum reserve like for crypto?
Yeah, I think so. We're going to do something great with crypto because we don't want China or anybody else, not just China, but others are embracing it, and we want to be the head. We're going to be ahead of AI.
So we want to be ahead on crypto. If you didn't hear that, I should have recorded system audio, but I put the mic there. So Kramer, kind of a different vibe from Biden. Seems you want to embrace this thing. Yes, we want to be ahead. We want to be ahead of China. We want to be ahead of everybody else. We want to be out front. So now pushing America has to be out front. So this is going to be way more opening up of crypto generally. It's a flag to the banking cartel that the dark state says, okay, now you can start pushing the plebs into crypto because we've already got full mine bags. Pump it with their money that you're managing, the asset manager. So by the way, a third and a fourth point. So I know high net worth individuals where I currently am to have Swiss bank asset managers, and their CEOs are sending them newsletters saying, it's time that we start to think about putting crypto in your portfolio. So they've been, maybe Nvidia, tech stocks, etc., doing whatever, and they are saying it's also time. So what you're actually getting right now, and this is the talk I actually gave this morning to my community member, and so you're hearing it quite soon after, by the time you're watching this, is that and this is a general guidance talk. Think the bell curve. So there it goes like that. In fact, I want to get a classic diagram of a bell curve, just in case there's some people that are, it's called the normal distribution, by the way, normal distribution. It's a statistical, looks like a bell curve upside down on the ground. Let's go images, normal distribution image. There you go. So that's a classic one. Let's go with that one, nice and big. In fact, this is also pretty handsome. It's in black. So there's your bell curve diagram. Let's make it big, view website. And what you're going to see is, I'm going to try plot for you where we are right now. And what tends to happen is the sigmas, by the way, those are Greek symbols for sigma distributions. So the whole concept, the dark state with their fraudulent story surrounding Satoshi Nakamoto and creation 2009 to 2011 is there. They are, in terms of time, where this is the passage of time, and this is the wall of money that will come in, the rate of flow in. Now it will never taper to nothing, but the surge, the change of in the rate of money. So think of it as a first derivative, the acceleration rather. Eventually you'll settle down at a certain speed. There'll be zero acceleration. There'll be money coming in, going out, etc. But that's the whole dark state put under Satoshi banner. Early adopters, Roger Ver in here, and then CZ and Vitalik somewhere there, and all of that. Then getting here, you're getting into 2016, 2017. You're still, and I'm going to put a line in here, you're still pretty early. When you're on the 1 sigma, you're still on the -1 sigma. So say you're kind of like me, not early guy, no way claim to OGdom, but 2016, 2017, you'd be around about this line. So in terms of quartiles, that's one quartile, that would be another quartile, and then this would be another quartile. And these are everything to the left and right are tails. So extreme early, the developing force of your digital money system. And these are grannies and people that will continue to walk into banks and always have been very analog and don't trust anything digital, or stupid, retarded, old, enabled, disabled, distrusting. I'm distrusting, but I recognize there's very little we can do to stop this. So in terms of this, that's kind of 2016, 17. The parabola part of this move and the greatest wall of money is actually coming in this quartile. So if we can call all that the first quarter, this, which is narrower by time, but will get a lot more money coming in the second quarter, and then that's the third quarter, and then, this is the laggards in terms. So the volume of space below the curve represents the wall of the money. So even though the time is skinnier, the Manhattan is taller. So what you got to have is one of the steepest parts of this bell curve is during this phase here. You can see it really starts to accelerate there. Then it starts to convex out. That's the decelerating. So the rate of new money coming in for the money that's already got in is slowing. So the acceleration is slowing. And then eventually the acceleration slows all the way back down to kind of zero, where there's money coming in and coming out, some of it's, etc. Now, I'm not saying this is the perfect thing, because I think crypto is going to continue to expand, but the rate is certainly going to slow. So it would probably have a fatter tail on the late side here if this is an acceleration curve. So I'm getting kind of technical, but where are you now? You're probably somewhere here. You're probably somewhere here. If this is the 16, 17, 18, 19, and 21, that's last bull market. You're probably there, and we're here, and you're probably round about here now. Some of the biggest walls of money are about to come in. Maybe a bit sooner, because as you saw, it's the first Australian pension that's doing it. So in terms of some of the institutional money, I might be a little bit out there. You might only really be around here, literally at this point. And that's good, because they're the bag pumpers. They're going to take your dad and your moms who kind of not really been that into it, and it's just a sort of news thing and something they've heard about. And they're going to take their pension money and start drip feeding it. And 17 million is actually not a lot, probably, as the percentage of the portfolio. And as you heard BlackRock, they said 1 or 2%. So they're starting small. By the way, BlackRock's not saying, hey, do 1 or 2% of gold in your portfolio. The debt markets are collapsing. They're not telling you the bond market's wrecked. That was us in 2020. That had lost 45%. And that level of volatility for something that grows so slow and is meant to be so stable makes it no longer a valuable risk-adjusted asset to hold. You should be dumping it. Anything that could lose 40 or 50% should be the kind of thing that gives you 2x, 3x in the good times, and even 10x if it can fall that hard. Bonds don't do that. They've been trickling upwards for 40 years very, very slowly, like a snail crossing a brick, and they paid you a little bit of interest, and now that interest is substantially below the rate of devaluation of fiat. And that's the other point I need to make to everybody in the crypto space and also in the traditional market space, is that what you're going to see is that as the bond market contracts, the fiat value's buying power is going to accelerate downwards. So your costs of prices are going to suddenly, it's just going to seem to come out of nowhere. They're going to continue to accelerate. So as you see rates going up, costs are going to go up in inflation. So those that don't get involved in getting a higher rate of return in the new financial system are going to get poverty wrecked. The polarization of those who have been engaged in the new system early versus those that hold off. They're going to keep earning a salary, putting their money in bonds, putting their money in ordinary stocks instead of the AI stocks. I'm coming back to that Trump post. Note how he says AI. We did just do recently on the Market Sniper why Tesla goes through $1,000, and I hate their Cybertruck. But it's got very little to do with my personal opinion on one ugly truck. I think it's ugly. I think it's heavy. I don't think it's great for being a truck. I don't think it's great for being a sports car. I'd rather have a Porsche Turbo S, or if you want a battery iPhone car, get the Taycan. It's pretty cheap secondhand, and get yourself a traditional truck with diesel. In fact, burn the grease. I don't care. It's much better. It's much better range. You do 1,000 miles. I've got a turbo diesel, 1,000 kilometer. Let me say range. Sorry, I lied there. Wrong metrics. 1,000 kilometer range. I love the fact of being able to go really, really far without having to fill up all the time. Anyway, but that's all an aside. Tesla, fundamentals, AI. So you're going to see the worlds colliding around AI, crypto, and auto vehicles, because I touched that in Tesla. And what's going to end up happening, as we've said in our Reset Sniper videos 5 years ago, having spoken to someone very high up in VW, now currently under great stress, they will eventually make cars with all the spec, and you'll buy the base model, but you'll get it with all the spec. And then you will have a micro payments crypto wallet that you'll have to charge. Let's just for fun say XRP. And every time you use the air conditioner that you never bought, it's got an inherent rental agreement, and it'll tick a couple of sats of your XRP for as long as you're using the aircon. If you've got massage seats and you never bought it, you just bought the base car, but you're getting the all bells and whistles car, you will have inherent rental agreements in components that you never paid for in a base car, and that allows them to make all the cars the same. They don't have to do different things apart from potentially color schemes and things like that. And they'll have separate divisions that do customization. I had a purple M3 Cabriolet with orange interior. I did pimp out style. You can have that individual. That was BMW. They did that. You can do it with Bentley. You can do it with everything. So they'll then have a separate division for people who want to do fancy stuff. But essentially car making will eventually be quite standardized with all the tricks, and you can buy what you can. The rest is rented. KTM motorcycles have tried that, where they give you a whole bunch of features and it's free for the first few weeks of your use since you have your motorcycle, and thereafter they take those additional perquisites back, and you can have your bike at base level, or you can pay a monthly fee and have those software. They're typically associated with the techie and the software things like clever traction controls off, but with ABS, or no ABS with traction control, special sport modes and features, and. So this is all coming with travel. So iPhone, cars, AI, all of this. Let's finish hearing what old Trumpety Trump said, and maybe just play that again for you to hear, and because it wasn't super loud. Whoops, let's take that off, and let's hear him say it one more time.
You're embracing crypto, very different from the previous administration. Strategic petroleum reserve like for crypto?
Yeah, I think so. We're going to do something great.
He also said strategic petrol reserve, petrol reserve, which is what the Americans do. They want a whole bunch of oil. They want to be clearly well stocked with oil, and then they want a second buffer in case of emergencies, like a war, like anything else, because you're going to be global policemen of oil, so that you are not only what you need and what your short-term and medium-term needs are, you're a whole backup system of it. So the question actually is, are we going to whale into crypto and be big and look to be doubly big, dominant, in a sense that we are reserving some of that crypto? Don't forget, everyone is looking at America and saying, well, as your debt markets collapse and your dollar fades, there's going to be alternative monies. So they're going to, of course, stablecoin is in fact the new dollar as far as many people should be concerned, but that they will hold other assets that will appreciate in accordance to their massive inflation they're going to be bringing because of the proliferation of money sustaining the system. There's that. Let's hear what else he says. And we also want to be out front in AI. So that there's obviously people all over the AI tokens, that category as well. So you get it's kind of a double whammy. There's an NVIDIA effect, and that's why, as I say, Tesla, the stock will probably go up because of the automation, the robotics, all the data that is being collected. So there's quite a bit covered in this. Let's carry on.
With crypto, because we don't want China or anybody else, not just China, but others are embracing it, and we want to be the head. We're going to be ahead of AI. We're going to be way ahead of AI, and we've got to produce tremendous amounts of electricity. You know that it's unbelievable when you think that we need more than twice what we already have. If you think that's pretty for a specific industry, but we'll be able to.
The other thing I highlighted is the energy consumption, and this is more traditional market sniper. But I think he's going to go uranium for nuclear power. I think there will probably still coal will be maintained and possibly even grown a little bit. China still is doing that. I think solar is going to expand a lot more in the US. They have the weather for it. Everyone should have solar panels. And I also think there might be a bit more of natural gas usage because America exports a lot and it's super cheap. They were actually burning it off as a waste product for many years ago. Anyway, there's that that's going. Melania's quite a babe. I'm just thinking, yeah, play your cards right, girly. Yeah. Anyway, sorry, getting distracted there. So that was a couple of things that was going on. There's also this World Liberty Finance wallet that's kind of interesting. So also a little bit newsy. So we got pension funds. So I mentioned Wealthy mate, high net worth, Swiss banker saying time to get in portfolio. I mentioned BlackRock, 1 or 2% allocation now. So starting small. Don't worry, there's the likes of YouTube influencers like Michael Saylor will be the other end of the extreme that don't run financial services companies. That'll go, you're only sitting on one chair. Why do you have anything else but Bitcoin that's going to 13 million? That's who he is. That's the kind of stuff he's going to say. But back to the portfolio and what you'll probably see, if this is to be World Liberty Finance, 74 million in there, and it is truly something that is being managed for him, what you'll probably notice is the bulk of the allocation is actually Ethereum at 388356.88. So I will take you past the Ethereum charts and explain to you there is a macro, not a super macro like XRP, that is, multiple 7 years, and our super other token that is the only other token that has a better macro than XRP, which you can find out when you book a call below or grab our mini course learning materials. Do that too, but book a call if you want to get engaged with us. But that point aside, ETH is his single largest holding, and I will show you technically. So we'll take a drive by ETH. He did people getting excited because there was a bit going into Link. It's about 2.2 of 74%, 74 million or 75 almost. So I would say it's not much more than 3%. Aave is about 1.5. So we can take a look at that stock too. And then the rest, Sol was very small. And this looks like some drop coin that's interesting. So let's go back first to Bitcoin, and then we'll do check-ins on those other tokens. Okay, while we're looking at it technically, I have the volume up. I'm not sure about the data sometimes we get out of these exchanges, but on the weekly, I want to just highlight how so far I think it's retail that's mainly captured by Binance. I don't know if the institutions, do they use Binance if they're buying Bitcoin, or are they doing some sort of direct, or there's some other direct markets? Do they use the same tools as retail? Because actually the volume here, if this data is accurate, this is what was going on in the previous bull market. Then you got the bear market. Look at those red letter days. Wow. That was the brutal downward leg that was, FTX and everything else, and then a super capitulation meltdown, and then you went very, very low vol, and that was essentially your bottom. And we called that inverted head and shoulder there and said that's going to take you up, and it was the 25k was the key level. It went up, and then it went up, and then it went down, and then it went down again, and then finally the announcement of the BTC ETF got that running, and then we went into a holding pattern for that long. That was very frustrating for very many people, large part of this year. That's why we were early though on this stage, and many people didn't realize it because we had a capping descending line. We weren't sitting there waiting for a new high, which most people do. Oh, now we have a breakout. No, they didn't understand continuation patterns. You've got to understand the difference that does for your risk reward ratio by getting in at 67k and not at 74k. Especially if your stops are over here and you can later on drag them to here with lock-ins and you're running. Anyway, that's old stories, that's old news, but this volume so far is ridiculously low, truly. And that's why I think, where are these institutions actually engaging? Because this is the biggest exchange so far. They've weft it after they threw out CZ and made him a jailbird for not particularly very much that I can tell. But anyway, so we're dropping from the weekly to the daily. And even though it looks a bit bigger here now because of the relative comparisons, it's still not that big. If you have a look at it, the bull market run there, you see in this early stage, there was more volume engagement here. There's more volume engagement. That's gone a bit pale. So let me go 3 days. From this low and up, this is still small beer. This is still small beer truly in volume when you're looking at it like that. So back to what technically happens. The breakout, you get the best moves when you pump straight up lines. But you're not in that stage anymore. That you don't need me to tell you that, but I will anyway. And that was your boom, boom, boom. That was your best part. But funnily enough, you often can get This is grinding. So many people will become quite bearish. Many people will become quite bearish. You get these surges and then you grind. And that's an upward grind as well. And typically in normal circumstances, almost most normal circumstances, you say we're on a bull pole, you've got a broadening structure with an ascending element to it, like that. You're usually going to have some kind of correction, is what we would normally say. And often that is correct. But however, in bull market cryptos, the grind is often the correction, even though it's still bleeding up. So you can get some element of squaring up like this, and you can just pop and go. So you can go through a slow period because the market is so strong. You can get out. So you have to watch extreme conditions. Extreme conditions, the rules change. There's this fuzzy logic to it. This is your rest now. You know, because you still got to drift up. You've had some sell-offs, you've had a bit of scared money, you had a schizo day, you know, on the payrolls number, etc., etc. But if you're starting to see more pension funds that are sitting on massive under provisioned to meet their commitments, they need a Hail Mary to fix the fact that they stuffed with debt that the governments have forced them to be the buyers of. Now we have stablecoin digital dollar being the buyer. Funny that, straight after the debt market hit its high, its valuation, and turned bearish, and after a 40-year bull. But anyway, let's not go down that one. I've discussed that one before. So what can happen is you square up a little bit here. You square up, you chop, you churn, bit of upward drift, some sell-offs. These liquidations that some people get, these are people that are hopelessly over leveraged. That's not even a major on a decent time frame correction. You are trading too big, and you're trading with too much leverage, and you've got too large a positioning size if anything like that is happening to you. You can go up, down, party around. You can square up for a bit and go strongly up, or you can just sometimes start going and then drift and get another upward leg. So be careful about it being overly bearish during this period. So fundamental stories, normal curve discussed. You are getting into the thickest wedge of money, and remember that normal curve diagram, it's the thinnest time frame. A lot of money in a short time frame. If a lot of pensions all decide they need 2 to 3%, and if they're underfunded, they've got to really throw the dice and go 5, even 10% crypto. And Bitcoin's one of the beneficiaries, and then XRP is going to be some of the beneficiaries, and they have an ETF for that, and their stablecoin RL, we'll cover that a little bit. Not that I'm an expert, I'm actually quite poor on all of the aspects of that, but what you want to watch in terms of what can have bearing on moving the needle on the charts, I will show you an interesting thought. So actually, I think this is kind of rest, pause, grind, but the next major move, because you can have small moves to the downside like this, like that, the next major significant move will probably still be an upside one, despite stock market being overvalued, lots of things. And on that cautionary point, you have someone like our friend at Interactive Brokers, who says, and again, I'm going to play.
A downturn is a very big risk because margin balances have been growing very, very quickly. And especially if you take a thing like Bitcoin, I mean, you know, margins on Bitcoin futures, for example, charged by the CME are extremely low. So I am very worried that people overextend themselves. A sudden hit comes into the market and Bitcoin falls, say, 30, 40, 50% from one day.
So he's highlighting that margins are being kept very low for Bitcoin, which is a very volatile asset. And I'm inclined to agree. I mean, I'm trading one particular FX pair, which is against the dollar, and the other is the Korean won, which is not a huge nation, but it's still a very big economy. And I'm surprised how much margin they take just for small positions versus a highly volatile crypto. So the owner-founder of Interactive Brokers is just warning that there is. So there's that on that side. But I don't think that lightning of what he's talking about, a 30-40% collapse is yet to happen. It could, now would be the typical environment. It could, if there's other things. If we have the event risk, if we have, but then there's one thought that's also been occurring to me. We could have a financial event risk. So if it's not war, it's not fear driven by this, it could be a financial event risk. You could have flight towards crypto that could actually one day, instead of initially, so until now, and this is a dangerous statement to make because it's a possibility, it's not a guarantee. I'm talking about scenarios. I'm open thinking, I'm brain thinking here with you. Eventually I assess there comes a time a couple of relationships break down and they flip in another way. So I'm talking, so I've already mentioned the 4-year relationship. The new supply that comes out on the halvening is getting lower and lower. It's far more important what's going on and what's already been mined. Yes, a lot's been lost, a lot's in circulation, and what's new is eventually going to get more and more trivial than what's already out. And other tokens market caps, remember our Bitcoin dominance on the inverted Bitcoin dominance charts, seeing other people doing inverted Bitcoin dominance charts now. I wonder who they've been watching. That if we to get the 24% right down to 20% on Bitcoin, the halvening cycle is not going to have any meaning if the bulk of the tokens, the 80% apart from Bitcoin, or the 76% when it makes that target, not tomorrow, not next week, not next month, obviously, because it's recently just been 61 and it's only falling. We will take a look at that chart again. What happens is it's not the single most biggest token anymore, or even if it is the biggest, it's there's so many others very similarly big or approaching as big that the 80% is far more important and dictates the market than one guy's particular supply aspects. So you could actually then start to see that Bitcoin is not the major driver in when you have bull markets and bear markets, and it starts to become more about liquidity of the central banks, which it's already been about, but it doesn't have that halvening tune as well that has to be synchronized to an electoral presidential cycle. So that doesn't mean it ends abruptly. It can be phased. That's how I'd expect it to be phased away a little bit. And then the other aspects within this is when the big traditional markets sell off, typically it's a risk-off environment and Bitcoin goes down. If we were to get something that is one day the other flipping, and that will shock, it will be a shocker event. This will be like a real shoe drop for me if it happens, is when you have a fear-based event that is financial, like the debt and bond markets. So remember we said you probably get a localized top here and pull back a bit. Well, you're already getting quite a strong rally. That is debt devaluation. So the TLT will be going down. That last little up move there is likely to be having the effect on the values of debt going down. You see that? Down. And we called this a rising wedge that you're going to break down through. And the US 10-year is a falling wedge that long term you're going to break up through. So what if it's a debt-based collapse? What that means is more money is escaping the old system. As everybody realizes, the normal curve, you're getting to the fat wall of money that comes in a short time. Listening to me here, this is important. Fat, biggest wall of money coming in the shortest time period. The gray area, and more specifically, since we divided it into quartiles, this area here, and I'm saying you are here. You know, this is where you are. So the fattest in the shortest time, this is also sigma deviations, but I've also put a timeline on this on the basis of, founders, early adopters, laggards. So I don't want to get it confused. That's sigma deviations, these thing. How far away are you from the normal? So if the average IQ is 100, that would be, 30, 40, 50, 60, 90, and then there's the 160s. So it can be whatever you want it to be, but I'm talking about a flow of money in here. We're in this fat wall of money in a short time frame. So I've kind of made this into a progression, a series, a movement through the bell curve. And what that's going to possibly do is, if bond money is leaving the bond market and rushing into the new digital financial system, a collapse in the bond markets could actually be associated with a pump on crypto, where before it was crypto bowed to the risk off nature. Remember I said biggest anti-fiat, gold. Gold moved first. It has moved. The central bankers have gone and got gold. But soon, one day, the central bankers might be saying, well, we also want to have 1%, 2%, 5% like BlackRock in Bitcoin. Market cap in Bitcoin smaller than gold still. That could move. They could start to have gold and a digital asset. So you'll have pension funds, asset funds, hedge funds, everybody moving into the new thing. Only now it's no longer black market for hiring hits and AK-47s and Pirate Bay and all that garbage they used to speak when I was entering the crypto space. It's now mainstream new financial system. And that wall of money could extend the cycle, going back to the 4-year thing. So part of me is saying from September to December 2025, you want to have a time stop for taking 50% of profits. But you don't want to close 100%, because if we're getting an extended cycle, and this is the biggest chunk of change, this chunk of change, if the shadow below the normal curve represents the money, that is the biggest chunk of money coming in the shortest time period. And this quartile is where I think we are. We're in this quartile right here, the left half. And that is, you're still not late. You're still not Joe average, which is the dotted line, by just getting engaged today. You're ahead. But this is going to be a very important phase, because this upward streak, you've just about the steepest gradient from here going into here. So the acceleration of the additional money coming in. And institutions is the market. Forget retail, forget humans, forget characters, forget individuals. Money managers with huge assets under management. BlackRock's got trillions under management, as you already know, but other asset managers, Swiss bankers, all now saying this is a product category we are going to get into. And that is very significant. And here's where you are. And that's why cycle could extend. And when you have a parabola blow off, like you did, say, the NASDAQ.com boom, if you get out too early, you can actually, at the parabola phase, in a very short time, it can double. You can leave half the gains of the market on the table near the end, because it starts to go incredibly fast. But making sure you get out and are not dopamine addicted when it's done insane amounts, and say, no, I just love waking up every morning and just being hundreds of thousands, even millions richer than I was the day before, and you can't pull the sell button, it turns quickly on you, you get a little bit depressed, and then it starts falling the other way. So you do need to close. You have to have planned your exit strategy on this, but be warned, it could be an extension of cycle on account of the wall of money that could be coming in as you get institutionalization and acceptance, part through this political pivot that says we are ready now. The handlers of Trump and the people that guide the handlers have said you can start steering the next leg of the agenda through our frontman, talking head, figurehead leader. This is our new position. And so we see the surge into what will now become mainstream. Early doors, but mainstream of cryptos. And that's a very, very important period. And the previous bull market could be surpassed in percentage gains and everything else. That's why I'm looking at the Bitcoin chart and actually saying this isn't huge volume yet. But you can do it for all of crypto. You can do Bitcoin. Let's just do BTC USD. Let's go market cap. And I'm not sure if we'll just get, where's it, crypto. And if we throw volume on there, can we get a volume on it? I'm not sure you can. You might have to add all there. There's others amongst you in the comments that can, So we're not going to get all market volume, that have added a lot of the exchanges together to get all volume. But my impression is, I mean, if you have a look at Bitstamp here, monthly, so it's a different exchange. You can see this volume here. It's still low. This is low. In fact, everything since 64 here on Bitstamp, it's showing me the same. So much so that I actually thought, is there a data problem with Binance? But I'm looking at it here and I'm seeing the exact same thing with Stamp. They can't all be badly reporting on that. By the way, just typical flags from lows to highs. That would give you a 404,000 on Bitcoin from the low to the next high. Now, you never made that at that bull market, and you've come back down, but you could still be on track eventually to do that. Kind of interesting from the low. So that would be the logarithmic and percentage-based gain of a similar level as the market that was the low of 15 to the high of December 17. And as I mentioned, this was not a particularly spectacular bull market. That was 20K, that was 69. It wasn't huge, and it got all the flush outs, the FTX, the Three Arrows, the Mashinskis of this world, all the chosen one thieves and frauds all in there, and it wasn't yet being allowed. This was the rev limiter bull market. With SEC, Gainsler holding everything back while they were getting behind the scenes everything in place. They are ready now. Trump is coming in on crypto, is ready to receive you. We have our bags. We're happy to have you coming in and pumping our bags. And we have the tech, and we are happy with where we're at and are testing for this to go ahead. So anyway, that's kind of interesting. You're seeing it doesn't matter where you choose BTC. The current volume levels, which tells me it's actually earlier on balance of probs than you think. Coinbase slightly different. I think a lot of them do buy through Coinbase, but I don't have the same history. But it's still not super high. If you have a look at, that's your aggregate there, a couple of outliers. Compared to there, that was the bear market. Compared to this and that bull market run phase, you are not there yet by any volume means. Look at the volume here in 2017 as well, going into the final. This is not anywhere near that. Not anywhere near that yet. So we are still got a run to put on in terms of Bitcoin. So Bitcoin, whilst in a grindy phase, so let's go back to our stamp, I suppose, and go back to the lower time frames. Whilst in a grindy phase, these can just be consolidation periods before the next surge, even though there is an upward tilt to it, because there is a bid coming in underneath here that is accumulating, and it is institutional money who doesn't like to whale in and puts limit orders. They're not like the retails guys. They're coming under it. They've got to get an allocation, and they're going to be here for a long, long time. They're going to buy and hold. These aren't traders. These are people that are accumulating. And I think it's going to be the same for the likes of XRP and others too. But it'll probably start with Bitcoin, because everybody has to say, well, we went the big guy first. You know, we can't go whaling straight into degen. Not that XRP, in my opinion, is a degen or Ethereum. But they probably feel that they need to start with the king, because the king of crypto is still Bitcoin. And the king of anti-fiats is gold, as we've said before. So we've said quite a bit about the news. There was something else that came in on the news, and it was a guy who was getting, and this is kind of important, again, it's gone. They've changed it. Maybe I must go, when I go more news, it's not showing me the articles. Let's just... the first person went to jail for understating his capital gains that he had made in America on that. So that is capital gains, taxes on crypto. And you haven't stated what you should have stated. This is a key point that we've said many times before. We've warned you that this cycle, they are far better organized. This is for that guy probably on the previous bull market. So there's going to be a whole bunch more of you in this next bull market with all the upside to come that are going to be watched, and all the exchanges have been sorted. and compliant. Otherwise, they get crushed and you end up in jail like CZ. So you end up with a World Economic Forum guy running a compliance department in your business. You're literally paying to have the IRS have a free office in your shop and check that you're doing everything you can to stump up everybody who's made money, and they're doing everything they should be doing, declaring that money. Now, that is where our reset preparation in our community with regards to ensuring that you are capital gains free. In other words, paying zero capital gains tax because you are resident in a country which has zero capital gains on this kind of instrument. Now, many of you could find yourself with 42%, 50% in all sorts of taxations. Plus, you've got the particularly Western aggressive, pivoting Bolshevik communistic types vibe that are talking about even unrealized capital gains that they could bring in the future with immediate effect. You really need to think of your standing in terms of how well you are prepared, and that is a specialty of ours. If you are American, a large part of our audience is, but of course Australian, UK, Canadian, South African, other English speakers in the Northern European area, a couple of Latin and Hong Kong and all of them. You need to think about all of these aspects, know your place. And in many instances, leaving your country of birth is one of the best things to do for your cash capital gain status, because other nations want taxpayers and will give you capital gains free just to get some fees off you, to give you a residency, and you can get a new slave master a whole bunch cheaper than the one that you were defaulted into. Okay, let's talk the charts now, because I've spoken a lot on a lot of things. Trump has prioritized crypto. We've said this enough times. I said from the beginning, he gets in, it's the crypto revolution. You just saw him confirm that with Kramer, and AI and energy, and things will get passed. So he's going to get regulators in there that will push stuff through. So oil, gas, uranium, if you're into any of those. AI, big. Check our video on Tesla. It's going to go up for the AI, the robotics, and the data, not on account of Cybertruck, in my take. Although my opinion doesn't matter. The people who buy the cars does. And then, of course, you watch the margin. You shouldn't be getting flushed out. That was Interactive Brokers. So just recapping all the news, and capital gains is going to be so much a thing. You're going to be getting request letters and demands and various other things from particular statist organizations. So overall, generally broadening out, but slowing down, volatility reducing. I see this doing a little bit of chop and churn and then working its way up and potentially having a mini surge period again. In short, I think this is a jogger who's briskly walking and recapturing his breath and looking. He's still making progress forward, but not very spectacularly. But there's a bid coming up under it, and then it's going to get chased up. As everyone realizes, and the herd starts to stampede, that is the institutional money of hedge funds, pension funds, massive walls, all have zero exposure, all now need exposure. Hence why I say potential for cycle extension. Do not let the greed genie bite, though you should certainly still take off the last quarter of next year, at least a percentage. So plan your exit strategy, write it down, make a contract with self. So other chartist-based things. So XRP looks like it's finished a bit of convexity, a little bit of a muffin top there after a nice surge off the bottom. I think it's going to start working its way up. I also think it's one of the tokens that's going to do even better than Bitcoin. We'll touch on the dominance. So let's actually go straight to the dominance chart. As I say, you're now seeing people showing inverted charts. I know virtually no one. I've never seen anybody who was showing upside down charts to people on crypto Twitter. And now they're doing it on the dominance chart. Where did they learn that from? The cheeky little devils. It's okay. Imitation is flattery. And maybe they didn't. Maybe they just thought. Maybe I put the thought out in the ether. Or maybe it wasn't even me. I don't know. But it's just kind of interesting. So this falling wedge is broken. You've got to move up there. You had a little bit of a pullback during the pause period. During the grind, we had a couple of sell-offs. The higher beta, number of cryptos came back quite a lot. Tron came back quite a lot. XRP's held up well. Others have pulled back a little bit. and you get that element of return move, but this will continue up and go here. That's where our 23% stroke 20% eventual Bitcoin, which will be also the marginalization of cycles that no longer hold sway. The dissipation of the 4-year cycle, potentially, and it'll almost be more about presidents and policy being, if the 4-year cycle remains, then new supply. That is coming with the fact that the overall market cap is going to see Bitcoin dilution as being relevant. So for me, we're still on track here, but you did have a pushback. You were at one point right the way here. This was a very clear break. Let's just take all my jaws off. So you are having a little bit of a pause, and Bitcoin might start the next move again. So you could still come back a bit more, but then I think that next phase starts again. This is beautiful. This is a beautiful chart for upside, aka downside Bitcoin dominance, in my point of view. So we did a little bit on debt and everything else. So yeah, back to XRP. So daily. So let's just remind everybody how well this has done. If you were, and everyone was so impatient, I said it before, not everyone, you guys listening and watching, the big silent masses that weren't complaining, but there were people, when you're doing an update on XRP is not moving. When you're doing an update, and I'm saying, I've got nothing to tell you until it starts to set up for a move. This was, and we were watching this because we thought this could be it. We thought that was going to be a move. It bled along super low vol. We said, here we go. No, flush out again. I mean, there was a couple of cry wolves in this baby. And then it set up there after it had done that little tricky dicky flush out, and that was it. But you know, you get too many flush outs, and then we say, no, it's happening here. It's happening here. You should have been in at 63 cents, and you would have run 2.9. And actually, this 2.34 pullback, where it currently is very strong. It's held up very, very well. You can compare that to, I'll do it with Tron actually, that got a XRP type pump because of XRP, saying, well, it's going to be the other or the new XRP on that vibe. And you can see it didn't get any degree of level of strength to the same level. So I'm putting that on the low there. That was around 48 cents. And you can see you're at the 78.6%. And I'm also going to show you that this is a bit of a bull flag and where that bull flag target takes you. By the way, we sometimes share snapshots with just a quick idea, because doing a YouTube, giving your heart and soul to it, getting dressed up, becoming unnaked again and putting on your best shirt and going on and polishing and getting your audio on, it takes time, and we don't do it all the time unless there's something very clear to it. If you are not following us on X under the Crypto Sniper, do not get the spelling wrong. There's a lot of frauds. We will never send you a DM asking you to invest in it. Never hand money over to somebody who's contacted you on crypto. The only way to engage is to go to 3W's The Market Sniper, the Market Sniper website, and you start it. That's our internal one for all our community members.com. This is our catchment page, and you go there. Book a call. Grab the free resource in the course. It should be this particular website if it ever flipping loads in that sort of base gray scale, and you'll get all the options. Here we go. Come on, load the thing. Damn, what's the internet doing? Here it comes. So don't fall for YouTube comments. We work really hard on removing spammers in the YouTube comments. Report as well if you see them. And engage from themarketsniper.com. I'll go back to it when it's finished pulling its teeth. We've got a little bit of an internet outage, too many blots here. So Bitcoin good, XRP good. This is a nice hold. So what about that bull flag while we're talking? So I'm going to take, in fact, before I do the bull flag, let's just do Tron. Tron as an example. That's when it surged. It went to 45 cents. And it's sitting here below 38.2. So it's lost more than 61.8% of it. It's probably lost about 65%. And at one point was down at about 17, it looks like, I would guess, percent. compare that with XRP's performance on the pullback. Now that's not quite fair, they weren't the same time frame. Let me just make the same time frame so that they look a little more similar, but that still doesn't change the fact of the colors you were in. And it's quite interesting that you ran the 61.8 and you bounced on the 61.8 and you're pivoting in and around here on the 78.6, whilst the Tron side of things, you went all the way into the blood basement. And if I pull that through, as I say, you're still sub the 38.2. So just comparing two tokens that both had the XRP pump. One's the real XRP, the other one isn't. Link was the thing that was added supposedly by the Trump wallet, and it had a little bit of a surge. I wouldn't be rushing in there now. Technically, I think you can get this cheaper on a pullback, by the way. So I'm talking about this allocation that got added, 2.23 million. I'll also highlight 2.23 of 75 is not 3%. Probably, maybe it is, but not much more. So I wouldn't get too overly excited if you are electing to monitor this particular holding. We'll put a link as a pinned comment for those of you that don't know where to find that, if you want to keep an eye on that for changes. So Link doesn't overly impress now, but it's had a good move, but it came a long way back, then it drip, and then push, up she goes. But it is going to be part of that status. It should probably be included with Algo, Quantum, Ethereum, HBAR, ADA, and XRP as the very clearly status. In fact, most of these winners will be. I can't think of too many others. Monero is probably the only token. It's worth looking at, actually. When Monero Moon, XMR, USDT. I don't think it's doing as well yet as any of these status tokens. Let's have a look at it on the big time frame, because some of you have asked. That's why I'm doing this. KuCoin's not the best chart for it. Let's try somebody who's actually had it for more than a weekend. Kraken. So it's a small little up move. It did manage to make a marginally higher high. That is a little bit of an inverted head and shoulder vibe with this bottoming. So it did trigger an inverted head and shoulder. I would draw the neckline there. You know me, we go for the teal blue for necklines there. And that was your final head low. So you'd probably project up. So, I would love to see this token winning. I'd also love to believe that it's 100% free. So I think that has just triggered, but it's off a pretty low base. And remember, it's the big movers. If you want to make money, it's the big early movers. And we prefer HVFs, but I think I can see 316 coming back for it. It's at 206, so about 50%. It's better than a kick in the backside. But there might be things that will move a little more and faster, and we don't know how much time it will take to get up there. But that was a long, broad base of reversal. You quite possibly had a little bit of an HVF in there as well. So Monero on the privacy, to talk about a token that is actually one possible token that might not be 100% captured by these guys and may give some semblance of secrecy. Yep, you have an upside structure in there, and that triggered and has been made. We can use our draw tool and draw it for you, and that way we've done Monero in fullness. And it's quite interesting how often, and we track this, that you get upside HVFs setups on the right shoulder of inverted head and shoulders. So there's your draw, there's your target, and there's your overperformance. Came down, sat on the support, smashed up. How's that funnel? I mean, you literally, that wick stopped on the stop level and back up. I mean, call it coincidence. And then there's a little bit of churn in on the neckline. So yep, you did that a little bit. You might try get it on another pull. It might come down and give another down leg that you could try get it if you want to trade it, because getting at 207, you want to run it through the 300s to 317. What was the final target? I think I got 316. Yeah, you might want to try get it a bit cheaper, so you can set some alerts there. I'll just do that. These are free, they cost no money. People don't use these enough. You should have charts everywhere, and I've even been shown how to hide them. That's thanks to community members and everyone else showing me how to be better. and I appreciate it. So yeah, that would be a great, if it visited back there, it'd be a good buy. And I'd like to see it do well. But so that's XMR. Who's the big movers today? So it's quite a little bit of a in-betweeners day. Let's see, on the last 7 days, who's been your best? Aave's been good. Well, you saw that is in the Trump portfolio. And Chainlink's been good. That's also in the Trump portfolio. That's a 17.8 billion. That's a 5 billion. So we can take a look at Aave for you and see what's going on. Personally, I want to do that bull flag though first before I forget, because I am forgetful. Let's just show you what could be possible and how XRP crosses $10 on its way, we hope, to the $20 macro target as of the macro position that we've been showing you for the last 18 months, and that now everybody is showing in Hindsight Intelligence. In fact, I quite liked it on that 4 hourly. I'm going to leave it like that. So we think that there's a bit of a continuation structure here. So that's typically called a bull flag. We tend to put the red line where we expect it to be broken. Our splitter runs through it. That's normally the finest line we put on. And where does the pole start? The movement started from the 48-cent low. Now that fib might have got a bit moved. I can actually take it off. I don't think it's going to play a role. I'll leave it because it's not too far off a 4.16 big fib extension. Let's go from that low up to there. Make that a bit stronger. So flags you typically project from the lowest point in the continuation, and that for us is likely to be that point over there. That doesn't mean you can't roll over. We think this looks like it's going to go recovery and it could even break, but that doesn't mean you can't have a fall, bounce on even the splitter and then go up, or have a fall and come all the way to the 38.2 again and support, maybe do a double bottom even with that, and there's even a possibility you could dip marginally lower low. So it depends what happens over the weekend, Friday, what news coming, etc. At the death of the week. Sometimes certain people get a bit defensive on Fridays. Jobbers, as they were often called, that are in the market, putting on risk, trying to get some alpha, and then they think, oh, time to get out of here now. I want to go be flat for the weekend. So they put risk on early in the week. There's often a cycle of that. So that's a $10 run for you in crypto, and I left this on because you kind of got a 42.3.6, which is a multiple of one of the Fibonacci levels. I don't think it's overly specifically relevant, but it's interesting, and you can see that's take you through 10 at the moment. That's on Bitstamp. That's bringing you from the lows from whence it began its move, with a number of upside continuations. Note within that, it's not straight line up. Slow, continue, parabola, rest, continuation structure, jab right up, continuation structure, move, rest, surge, and now you're in a rest phase as well. So we'll see. This could either go here and start a journey and be slow, and then parabola up, and then continuation structure, even correction downside, rebound, another larger continuation structure, melt up, continuation, flag, surge. That's how it'll how you should expect for that to do that. And that would take us through the $10 mark. That's actually showing us an 11 number. Pretty interesting, and that's good. Don't forget, the real juice comes in where we are in terms of this trade on our macro, which is actually one we've drawn and shared many times. The only other number we've ever given you is this exceptional logarithmic projection from the lows, that is a 123, but our upside HVF is a $20 call. It's a 19 and some change call, which sees us expect an overperformance. This is a very, very big structure. So that's why you're getting there. There's your 19.35. It's begging for that 20, and I think you'll go through that. Then you'll have some pause, some churn, some pullback, a little bit of profit taking, etc. Quite a few things could take place and then back to, there's a possibility then on a longer term basis of in and around the 124s. Okay, so I intend to be a holder. I intend to be a holder because it's a new status system, and it never pretend. Some guys said, why are you so hard on Bitcoin? I'm not hard on any tokens, and yet you're talking about XRP. Bitcoin told you it was liberty, freedom. It was created. The Bitcoin blockchain, all about freedom, getting away from states, central banks, and all of that. It was a lie. It was set up as a lie. It was a Trojan. Ripple came out and said, you're not our clients. We're dealing with banks, big corporations, and central banks. And that's what they've gone and done. And they were loathed for it in the early period. All dumped on Ripple. They're part of the bad guys, all of that. They said what they were going to do, and they went and did it. Things that pretend to be something they aren't. You know, your worst enemy is not someone who you don't relate to as an enemy and looks something different. You know, you get this with Christians. An Islamic faith looks different, and it's not who you are. It's culturally different. You think they're an enemy. They're not. They've just got their own way of life and their own thing that they do. Your biggest danger is the one that pretends to be your friend and is an enemy and gets close to you. That's the one. And Bitcoin feels more like that one. That promised you everything and tells you all you want to hear. Cuddles and sits next to you and then knifes you in the back. The other guy keeps his distance. You're not his kind. He's not your kind. He told you, this is who I am. This is how I worship. I'm going to serve these people. And in an essence, there was more honesty about what XRP was always going to be about. You know? It's a new digital financial system, and we're working with those people. All right, I don't like it. I don't want it. You've decided that's the journey. You have the power. You're going to implement it. So no, I don't particularly like you, but I will take the money of it. But it is more honest than being, hey, you're going to be your own central bank. That malarkey. No, Bitcoin's an on-ramp, and it's also bringing on the digital dollar through the stable coins, which are currently buying and supporting the debt Ponzi. Anyway, guys, we've spoken for a lot in a long time. It's been a fun clip to do with you. There's quite a bit of news we covered in the beginning edge. By the way, you need to think about your tax situations. You need to think about how you're going to be cashing out. It's not how much you make, it's how much you keep. By not missing the downside on it and insuring it, that means you accept you're not going to sell the high water mark, but you actively have a plan of takeoff. We will help with that. This is what we aim to do for our community, and there will be stages, so you'll still have some degree of engagement for your dopamine that will be there as number go up, so that you can wean yourself off the heroin, yet still hold big, massive gains that will be life-changing to your wealth, despite not selling the very highest wick on the tallest candle. You will retain the bulk of what you're doing without riding the downside. This is what the most of you get wrong. It's the dopamine that keeps you there. It is a drugged out state. You need interventions and pre-committance. Without the exit, the only exit is pain. Greed keeps you in the trade. Pain takes you out. Hear me now. This message must not be misunderstood. Hear me now. You need to maximize this. You need to be a wealthy slave. You need to choose a new slave owner, which gives you better terms. Lots of things that have to be discussed that we've touched on here. That is part and parcel of our community. Book a call below. Grab the free mini course if you're uncertain. Follow the Market Sniper as well, because these worlds are colliding now, both on X and on YouTube. The Reset Sniper, the Market Sniper, and the Crypto Sniper, they're all smashing together. Crypto is becoming mainstreamed. Who knows? Maybe I'll have to put it all into one YouTube channel again. I think not. I put too much effort into this one. Thank you for taking us through 50K. Share with friends and like. Till next time, I salute you.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.